So, you think you know where your mortgage payment goes? I bet you'd be surprised. That check you send to the bank every month, that's just the start of this incredible hidden journey that literally spans the globe. Today, we're going to pull back the curtain on this secret life of your mortgage. Okay, so you've signed on the dotted line. What happens next? You know that giant stack of papers doesn't just get shoved into some dusty filing cabinet. Nope. It actually kicks off this huge chain reaction inside a massive, kind of hidden system that keeps the entire American housing market running. So let's follow the money. Believe it or not, your mortgage pretty much lives a double life. First, you've got the primary market. That's the simple part. It's just a loan between you and your bank. But then there's the secondary market, and that's where things get interesting. It becomes a financial product getting traded by investors all over the world. We're going to dive into both of these worlds right now. All right, let's start with the part of the story you're probably familiar with, the primary market. This is ground zero, where your whole mortgage journey kicks off. So the primary market is, well, pretty much exactly what it sounds like. It's where lenders, think banks, credit unions, are lending money directly to home buyers, just like you. It's the absolute starting line for every single mortgage out there. And yeah, you'll recognize the players here, right? We're talking big banks, your local credit union, mortgage companies. They're the folks who hand you the loan to buy your dream house. But here's the thing. They can't just keep lending money out forever. Their supply of cash isn't infinite. So what's a bank to do when it starts running low on cash to lend out? Simple. It sells the loans it's already made. And this one simple act, well, that's the key to understanding this entire system. And that is where your loan begins its secret journey. Welcome, folks, to the massive, and I mean massively important, secondary market. You can basically think of this as Wall Street for mortgages. Seriously. In this secondary market, your loan stops being just a loan and becomes an asset, something that gets bought and sold by huge financial institutions. This whole market just exploded back in the 90s, and honestly, it's been the engine of the housing market ever since. Just to give you some perspective on how much things have changed, look at this number. Back in the early 80s, you had over 4,000 local savings and loans making mortgages. Now, fast forward just a decade, and that number plummeted by more than half. With all those local lenders disappearing, the system needed a new source of cash to keep the housing market from grinding to a halt. And that's exactly where the secondary market came in. Okay, so who exactly is buying up all these mortgages? Let's meet the giants, the big players who really run this whole show. I'm sure you've heard these names before, Fannie Mae and Freddie Mac. They're what's known as government-sponsored enterprises. What does that mean? Well, they're basically private companies with a public mission to keep the housing market stable and humming along. And trust me, they do a lot more than just buy up mortgages. What they do is they take thousands and thousands of individual mortgages from all across the country, and they bundle them all together into this one giant diversified pool. This whole process has a name, securitization, and it is the absolute engine of the secondary market. And the final product? It's called a mortgage-backed security, or MBS for short. Think of it like a bond. But instead of being backed by a company or the government, it's backed by the mortgage payments of thousands of homeowners just like you. Investors get a nice steady stream of income, and in return, homeowners get access to affordable loans. So let's break down how this works. It's really a four-step dance. First, lenders pool a bunch of mortgages and sell them off to someone like Fannie Mae. Then, Fannie Mae creates and issues a security that's backed by that pool of loans. Step 3, they sell that new security to investors all over the globe. And finally, as you make your monthly mortgage payment, that money flows right through the system all the way to those investors. Okay, so Ginnie Mae is the third piece of this puzzle. Now, Ginnie plays a little differently than Fannie and Freddie. It doesn't actually buy mortgages. Instead, its job is to guarantee mortgage-backed securities that are backed by government-insured loans. We're talking FHA or VA loans. This guarantee makes them super safe investments, which in turn helps keep mortgage rates nice and low. But it's not just about those three giants. Beyond them, there's a whole ecosystem of other players that all help keep the money flowing smoothly. You've probably heard of private mortgage insurance, or PMI. This is the stuff that makes it possible for folks with smaller down payments to actually get a mortgage. It's basically an insurance policy. It protects the lender and, importantly, the investor if the borrower can't make their payments. And because of that protection, these loans, which might seem a little riskier, become way more attractive to investors. It's a huge deal for expanding access to homeownership.
And this really gives you a sense of just how big and diverse this secondary market is. You've got pension funds, real estate investment trusts, or REITs, even individual investors all buying into the mortgage market. And get this, there's even a whole separate market for what are called subprime loans. Those are the riskier loans that don't quite meet the strict standards of Fannie and Freddie.
Okay, so that's the journey. It's complicated. It's mostly hidden from view. But what does it all actually mean for you, the homebuyer? I mean, why should you care? Why does this whole system even matter?
Well, here's what it means. It means that your local bank in, I don't know, Omaha, Nebraska, isn't just limited by the cash it has in its own vaults. Because of the secondary market, it can tap into this giant global pool of money. We're talking capital from a pension fund in Tokyo or an investment firm in London. And that connection is what ensures there's always a steady, reliable supply of money for people who want to buy a home. And really, that is the bottom line. This whole hidden system is what makes the classic 30-year fixed-rate mortgage, the cornerstone of American homeownership, even possible. Without it, lenders just couldn't take on the risk of offering those kinds of long-term, stable loans. And for millions of Americans, homeownership would just be a dream. So there you have it, a complex, interconnected system that provides stability and makes homeownership possible for millions. But it does raise a question, right? What happens when a system this complex gets put under stress? As we all saw back in 2008, the very same complexity that creates all that stability can also introduce massive risk. It's an incredibly powerful system for sure, but it's definitely not without its dangers.